Welcome to Shadow File, where global politics, money, and power collide. The markets barely flinched. The downgrade had already been priced in. Traders in Paris kept calm as numbers flickered across screens, a sign the shock was absorbed before it hit headlines. That downgrade stamp in red made a good headline, but for markets it was more atmosphere than earthquake. Investors who anticipated the move had already rebalanced portfolios. Hedges were in place, volatility muted. Still, the move is a warning. Fiscal strains in France could cap the euro's rallies in the weeks ahead. Dig deeper into what priced in means. Markets move fast. They trade on expectations, not just events. When traders see risk ahead, they adjust long before the ink dries. That's why what looks dramatic on paper often plays out as calm in trading rooms. As the glowing euro coin visual takes center stage, say, despite the headlines, the euro has kept its footing, standing tall against a wobbling dollar. Expectations that the Federal Reserve will ease policies sooner than feared and fewer ECB rate cuts are giving the euro fresh support. In short, the dollar's future is growing less certain, and investors are betting the euro will benefit. For everyday Europeans, a stronger euro matters, from imports to travel prices. And for global investors, it signals shifting momentum. A resilient euro can tighten trade balances, ease inflationary pressure for eurozone consumers, and attract capital flows. But it also raises the stakes for exporters. A stronger currency can make their goods more expensive abroad. Show the traders celebrating 18.4B visual and narrate. Speculators aren't just hopeful, they've put real money behind it. Net long positions on the euro versus the dollar climbed to roughly $18.4 billion, near a two-year peak. That figure isn't trivia. It's the market voting with its capital. We expect the euro to rise. But remember, speculative bets cut both ways. When sentiment shifts, that same flow can reverse sharply. Contextualize risk. Large net longs amplify moves. If fresh economic data surprises to the upside or downside, fast money can accelerate swings, creating outsized volatility in short order. So bullishness today is courage and exposure tomorrow. When the pound London skyline image is on screen, say, the pound is finding traction, climbing to about 1.359, its strongest level since early July. That kind of momentum matters. It signals confidence in the UK's near-term outlook and gives households a small relief on imported goods. For investors, sterling's rise is a reminder that global capital rotates, seeking stability, yield, and safety wherever it finds them. Implications: a firmer pound helps tourists and shoppers, but it can pressure exporters. Policymakers watch these moves closely because currency strength has real consequences for jobs and prices at home. As the falling Bitcoin visual appears, narrate. Crypto took a breath. Bitcoin slipped about 1% to roughly $114,735, marking a third straight decline. Digital assets live on sentiment. 3 down sessions in a row are a reminder that even crypto's biggest names are not immune to macro pressure. For traders, Bitcoin's pullback is a moment to reassess positions. For long-term holders, it's a test of nerves. Bitcoin's moves often respond to interest rate expectations, risk appetite, and headlines. When central banks tilt toward easing, risk assets can rally. But when fear rises, crypto often leads the sell-off because it is highly leveraged and sentiment-driven. So whether it's a resilient euro, a rising pound, a wobbling dollar, or a retreating Bitcoin, these movements ripple into jobs, prices, and everyday decisions. If you want to keep watching the forces that shape your wallet and your world, subscribe to Shadowfile. We'll keep digging past the headlines and into what really matters: the power, the policy, and the people.